Hey everyone, and welcome to Market Psychology 101, where we try to find value when there is fear and to be cautious when there's greed. This video is going to be a little bit different than the normal videos where we look at charts, we do some light technical analysis, see where things are, whether or not there's good value. We're not going to be looking at fear and greed more than just this screenshot right here with all these odd advertisements. I mean, what is this? What is Timu trying to sell me here? Uh, I don't need these pants. This looks like a rain boot for a dog, a cover for an HVAC, some sort of vest, and I don't even know what that is. Anyways, we're going to be talking about the importance of making an investment plan. Now, I can already hear what some of you are thinking. Why the heck should I do this? Please, for the love of God, take the time, take the 10 minutes to do this. And I'm going to do this with you guys. And remember, none of this is financial advice. So I want you to make your own investment plan. I am hoping that what I do here can be something that motivates you. And but please don't just copy what my plan is here or how I'm structuring it. So I have plan and I also have rules. And I'm going to be going over what those are. If you've been watching my channel, you probably already have an idea of what some of these rules will be or investment plan. So, number one is going to be for me invest in a product you like. So, number one, when you invest in a product you like, it's something you know about. It is a product that you can explain easily to a 5-year-old or a 10-year-old. For example, if you were going to buy stock in Amazon because you like Amazon, you could explain to a 5-year-old, I am putting, and this is a way for you to justify, I am putting $1,000 into Amazon stock because I really like what they do and how they're able to ship pretty much any type of product to any house in the country. Okay. So if you're able to explain what a stock or crypto is to a 5 or 10-year-old, then you are at least beginning to understand that what the product is, and you're not just blindly throwing your money into the abyss. Number two, this is for me. Invest in a product you use. So, sticking with Amazon, I use Amazon services. I like them and I use them. It's pretty simple. Now, let's say there's a different product or stock. How about Victoria's Secret? Is that a product I like? Well, yes, on other people. Is it a product I use? No. So I have no insight or knowledge to give me an advantage if I were to invest in Victoria's Secret. Now, if my girlfriend or wife were to have that, and by the way, I don't have a girlfriend and a wife. I'm just saying, if my partner did use this product, did like this product, then maybe I have some insight. And I might ask my partner about what she feels about the product. If also one day she stops buying Victoria's Secret because she doesn't like the product, then I might reconsider how much money I put into or leave into that stock. Now, there's an exception to this rule, and that is crypto. For most of us, for many of us, if you are investing into crypto, it is not something that you are using. Sure, there's talks about Bitcoin replacing currency one day, and maybe that will happen. I don't think it's going to happen anytime soon. I have no idea. But if the dollar were to collapse, which maybe will become a thing in 20 years, who knows? If it does, people have talked about how crypto might be the currency to replace it because it's non inflationary. There will always be the same amount of Bitcoin. So you can't just keep printing it. We'll see if that ever happens. A lot of people have equated crypto to being digital gold. So Yeah, crypto doesn't really follow the rules of something that we use. So with crypto, if you are to invest into it, I think it's important to remember to do your own research. All because you've heard about a crypto from somebody else somewhere else does not mean you know enough about it to put your money into it. So, a lot of the cryptos that I will be talking about on this channel exclusively are the ones available on Coinbase and Robinhood. And Coinbase and Robinhood are both publicly traded companies that the US has said are good enough or okay enough for you to invest in. So, with that, it is my hope and understanding that many of the cryptos available on either Robinhood or Coinbase will at least be more legitimate. That does not mean that any of those cryptos on Coinbase, especially because they have way more. Robinhood has like a dozen, Coinbase has hundreds. That doesn't mean any of them can't and rug pull and never come back. So if you were to put in money and all of a sudden it just vanishes, Coinbase you do have to be more careful with. So crypto, do your own research. And I'm going to also add a caveat to crypto. This is for me personally, no more than 20% of my portfolio. And this is for me. Again, guys, I don't want you to copy my plan. What I do want you to think about is the thought process into of what I'm putting into this plan. Okay, so right here, I'm just using a Google document. You can go on docs.google.com. Most of you probably have a Google profile, and hey, there's a product we use. Do you like that product? Maybe think about investing into it then. So, at least with crypto, because it is more risky, you should do your own research. And for myself personally, not spend or not have more than 20% in there. So, let's say I invest into a certain crypto and all of a sudden it goes gangbusters and I withdraw that money and it is double of everything I have. I I might roll that money into my Roth IRA. I might roll that money into stocks. I might use that money to pay down some things like my house and whatnot. So all I'm saying is that at any time, I don't want to be over leveraged in the crypto. And the reason why is simply it's way more volatile. We've looked at the Bitcoin rainbow chart. I mean, look at this. Bitcoin price can go from $520 to 20,000, back down to 3,500, 4,000 to 70,000. The stock market isn't like that. So because crypto is more volatile, I'm not going to put more than 20% of my investment money into there. Let's go to rules. I had another investment plan idea, but it's escaping me right now, so I'll put that down later. Rules. You've heard me say this: time in the market is more important than timing the market. And we talk about this when I look at these charts with you guys. When something is at a yearly high, I'm not looking to put into it. However, if I increase my time in the market, I don't need to time the market. If I increase my time in the market, and let's just backtrack here, and something is at a yearly low, let's go back even further. Something's at a yearly low, we don't know that it has to go back up. What we do know is because we are at a yearly low, this is a much better time to invest than up here. So I like things to be within 10-20% of a yearly low. And you know what? We might dollar cost average in, and this might happen. That's okay. It might happen again. If it is a stock that you like, or a crypto that you like in this example, then each time it goes down is a greater opportunity to dynamically dollar cost average. Let's do that. Oop, have to go backwards. Dynamic DCA. So dynamic dollar cost averaging means that if it's a product I like and use, that the lower it goes, the more I will put into it. Now, again, you have to do your own research on any stock or crypto. There are no guarantees. What I am trying to encourage you all to do it in the way that you think is when something gets lower, that you're not panicking and that you're not selling. Because if you panic sell, you are selling bottoms, which inversely means that when you're excited and happy is when prices are going up, and you're buying tops, or you're more likely to buy tops. It will be harder to find long-term value in if you are not following this plan. Okay, it will be harder. So again, when things are going down, we get excited, and I like to take a look at longer time frames. All right, so another rule is to react to favorable conditions. Okay, what do I mean by favorable conditions? Fear below 40. If we look at a fear and greed index, I have a timer going off here. If we look at an index here, we can see we are right in the middle, and it's not really going higher, and it's not going lower. It's just kind of hanging out here in the middle. So that isn't the best time to get in. We would look to see when we are down here. Okay, that's rule number one. Another rule would be, let's see, fear below there. What's another one I talk about? Fear below 40. So I'm going to be looking at some of the other charts I have up. This is some smart money, dumb money. I apologize. I lost my train of thought. Let me just go back to this, though. Again, the importance of what I'm trying to encourage here is making a plan and having that plan be something for you. Okay? Have your plan, have your rules, things that you will make sure that you are going to do. So, all because the fear is below 40 does not mean it's going to be the bottom of the price right there. Okay, so this might create a good condition. Again, we're looking at multiple conditions that can help us with this. So we're reacting to favorable conditions. We can put within 20% of a yearly low. That does mean you have to be patient, okay? And that can be harder with certain stocks, such as, let's go to stocks here. What's one I can think of? Costco. This is a great stock that seems to always be going up. If you look at this one, I mean, look how strong of a stock that is. However, if we were to go just within a yearly time frame, does it ever happen that even Costco gets within yearly lows? Look right here. If Costco was up as high as 600 and you were buying down here at 450, look at what it's today. 700, almost twice as much. And the opportunities aren't as plentiful, but they do happen once in a while. And so that does bring me to this word right here, and that's react. We're going to underline it. Make sure you are reacting to favorable conditions. Another sub rule for that would be not getting caught up in predicting what's going to happen, because Guys, we never know. And I think crypto crypto has spawned hundreds or thousands of YouTube channels where people are really locked in on predictions. And you guys hear me talking about it sometimes too, that, hey, look at what it did this cycle. Look at what it did this cycle. Things tend to repeat. Okay, that's what crypto is doing now. It does not mean that it has to keep falling within this range and that it can't go down here. Or look at this, that it can't go up here. So, do you think people really knew about this rainbow back here? Probably not. As we keep going, sure, we notice a pattern emerging. And it might keep playing out with that. But guys, what if I told you about trend lines? Trend lines are as good for as long as they're good for. I know that sounds simple, stupid. I mean, look at this Bitcoin trend line right here. It's still good for as long as it's good for. Okay. We'll see if it bounces off of that again. But what if it all of a sudden, what if we had a mid-cycle top and all of a sudden it comes back down here? And this thing doesn't matter anymore. Then we'll be doing the opposite. So just something to keep in mind. So I'm trying to think if I can think of any more. I know there's more. And guys, maybe this is something that will happen for you when you start to create your investment plan and rules, and that you might get stuck. This is an evolving document, and it's supposed to be. And so something else that you would have to consider is how much extra money you have on the side. So whatever money you have to invest, per month, does that mean you have to put it in now? No. When the market's hot and it's going up, maybe you dollar cost average into your IRA every month. Maybe that's just something you do as a rule of thumb. And you dollar cost average X amount, okay? And I know the IRAs have a limit of how much you can invest. What is I'm putting this on my phone, of yearly IRA contributions. So if you're under 50, you can only put in 6,500 a year as a limit. So that's like $541 max. Now that's probably going to go up in 2024. They might raise it to 7,000, so maybe that number is going to go up. But just something to consider, that let's say you have 1,000 a month. I know that'd be pretty sweet to invest. Maybe every month, no matter what, you put in $541 into your IRA and you use the rest for stocks and crypto. Well, stocks and crypto, again, we're trying to follow one of our rules of looking to see when it's within 20% of a yearly low. Another one I can talk about, weekly, monthly RSI under 50, double tap oversold. And that's sometimes. I mean, when we double tap the oversold on an RSI, like here, I say that because sometimes the price will jump down a bit. However, let's look at Apple here. It is almost never oversold. When it's under 50, this is a great one to buy. But look at this. Apple, I guess you could say double tapped here, but really you could say that was a single tap. And so that rule isn't always great for everything. What would be another one? React to favorable conditions. How about weekly, monthly buy signals? And we've talked about what some of those are. UT bot alerts. And I'm going to show you guys this right now. So if we go to the 5-year, puts us on the weekly. It's an indicator we have. You could say that every time you get a weekly buy signal on this indicator, that it's pretty good. Same with monthly. And so that's one of them. The other one I've talked about is the 1020 MA crossover with Fibonacci signals. So this one has a lot more rare opportunities. And guys, look at the space between these. I know it seems like a lot, but sometimes it takes months for these to play out. Okay, or even less. If we went to Bitcoin, we look at that, we've only had 3 signals within the last, well, what was this? January 22. The last 2 years, we've only had 3 monthly signals for this one. So, ET bot alerts, 1020 MA. I just want to get the first part crossover. I get it. So I think I'm going to leave this here, guys. This video has already gone on for 20 minutes. And again, what I'm trying to impress upon you guys is the importance of market psychology, and that is trying to retrain our brain to get excited when things are bad and when things are getting worse. When there is fear, when there is fear in the markets, when things are oversold, when everyone's talking about how bad things are. Because if it's a product you like and use, something like Apple, Amazon, these things over time, overall, go up more than they go down. And that's not to say that we can't have a giant recession. I mean, let's look at 2008. Or no, 2000. That was one of the longer ones. I mean, look at this. We made an all-time high back here in March of 2000. And how long was it until we surpassed that? Let me find that level again. 1551. When did we get above 1551? Just briefly before 2008. So that was 7 years. And as soon as we passed it, what happened? Another dump that went even lower. So, you know, all because things are getting really high. If you're buying up here, look at how long you had to wait to see great returns. It was more than just 7 years. Again, this was March of 2000. You had to wait practically 13. Look at that at the bottom. March of 2013, you had to practically wait 13 years for some of these things if you were buying up here. And so that's why we're looking for yearly lows. That's why we're looking for fear, so you can maximize your value. Otherwise, you're waiting. Think of this. You're waiting 13 years to just get any bit of a positive return. And this can happen to people is after they invest up here and they start losing money, they feel dejected, they feel sad and upset, and then they stop investing. When if they would invest while they're feeling sad and there's fear in the markets, they would be making money overall far sooner. And if you invested down here, even when we get a crash, you'd be like, okay, whatever, you know, I'm back to where I was with some of my investments back here. And we have never returned to these 2008 levels. We've just been going up, up, up. So that's why I'm cautious, because right now we are still in greed we were in extreme greed for a bit during December. Now we're in greed. That's why I'm cautious, and I'm saving some money on the side for later because, yeah, we made an all-time high today in on the SPX, and I believe on the Nasdaq we made an all-time high a day or two ago. So yes, things are great. As you guys see, we can make an all-time high and then come back down, or we can make an all-time high and chop up for a little before coming down. So no one ever knows how long these things are going to run. That's why dollar cost averaging tends to be a pretty good strategy. But again, the point in market psychology that I'm trying to get across today for this channel is just please take the time to make your own plan. Do not copy my plan. This is just something I've talked about with you guys, and I'm just, for the record, this is not my plan verbatim. There's more to it than this, but I'm just trying to help you guys train your brain on how to think to be able to invest when conditions are bad, because as I just showed you, over the long term that tends to be more favorable and will get you more money. So this channel is for the low to medium risk investor, people possibly new to stocks or crypto, and I'm trying to help any of you guys based off my experience, knowledge, certification in the field of psychology and investing, because guys, I've made mistakes too, and I want to help the community of this channel learn from those mistakes and learn from my knowledge and things that have worked for me too, in order to maximize your value and your return on your investment. So if you're new to stocks or crypto and investing on Robinhood, Coinbase, I think this will be a good channel for you. And I know this video might be kind of boring because we're writing stuff up on a Google Doc. However, this is very, very important, because if you don't have a plan, I repeat, if you don't have a plan, you're just begging to get wrecked. And you should not be investing into stocks and crypto. If doing a plan is too much for you, maybe just consider dollar cost averaging into an IRA or money markets, whatever, and get a financial advisor and forget about it. But if you have extra money that you feel you are smart enough and patient enough to do some good with over time, again, we're not talking about trading, leveraging, calls, puts, anything like that. Talking about buying and holding. That would be, I think this channel would be good for you. So another rule, just considering all the things that we've talked about, have an entry plan, have an exit plan. Because maybe you want to withdraw eventually from some stock or crypto that you put into. And for crypto, yes, you can have Bitcoin and hold it, and it have amazing value going forward from back here. We don't know what it's going to do in the future, but it's possible. Some of the cryptos you buy and hold might be worth 100 times more in 10 years. We don't know. Maybe. I mean, some people bought Bitcoin back here, and the money's worth hundreds of thousands times more now. However, with Bitcoin, especially if you invest into any altcoins, if you're selling in these areas when the altcoin goes up 20x and stays at that price just for a month or two, at least when it comes to crypto, I highly encourage, or consider, I should say, selling and taking some profits. Not that it can't go higher later, but as you can see in these cycles, it's so volatile. You can sell for great profits and then buy back in down here. Sell for great profits, buy back down here. Okay, just something to consider. Having an entry plan and exit plan, what percent are you keeping in or taking out? When are you taking out? All that sort of stuff. So hitting the 30-minute mark, guys. Thank you for watching this video. None of this is financial advice. I'm not a financial advisor. I am trying to share my knowledge and experience that I have through the field of psychology, which I am certified, to help you guys and to help you learn from my mistakes and to help create safer, smarter investors, because seeing other people do well and make money off advice, or not advice, but education, any teachings that I can share, that's something that makes me feel good personally. I don't mind if this channel ever makes money, but it, like from YouTube, but if this is able to help us individually make money, that makes me feel good. And I think just creating a plan, following some of your own rules is a good place to start, and where you should start. And again, do your own research before investing into anything. So thank you guys for following. Have a great day.